All right, today we're taking a documentary-style look at a really interesting market cycle in the NASDAQ 100. Now, this isn't about your traditional analysis. Not at all. It's about observing a purely geometric system in action. So, let's dive right in.
So what we're looking at here is a proprietary system called Market DNA. And for this explainer, we're going to be using its very specific language. We're just going to look at the visual data exactly as it was documented with no outside interpretation whatsoever.
Okay, before we go any further, it's absolutely crucial that we're clear on this. This explainer is for documentation purposes only. It is not financial advice. So please keep that front and center as we explore the data together.
Our case study today is centered on the US100, which, as you know, tracks the NASDAQ 100 index. Our goal here is super simple. We're just going to document the phases of this geometric cycle precisely as they unfolded. No predictions, no analysis, just observation. Now, this is a really important point. It's key to understand that market DNA operates on its own unique geometric principles. It doesn't use any of the traditional tools, no technical, no fundamental, or quantitative analysis. Our job is simply to describe what is visually present in the documentation.
All right, let's get into the timeline. Our documentation kicks off on January 18, 2026. This is what's called Phase 1, the entry plan. This is the moment the initial setup for the entire cycle was defined. Let's take a look at the chart right at the start of Phase 1. You can see the geometric structure is already completely laid out. We've got several key shapes here, these triangles, a trapezoid, and a line that's labeled delayed mirror. These are the core components we'll be tracking. So the plan laid out two very distinct entry levels from the start. The primary entry, you can see it marked as M, was set at 25,203.7. Then there was also a secondary entry labeled PC, which was defined at a lower price of 24,880.4.
Now let's talk about the risk framework for this cycle. The plan was based on a hypothetical capital of $100,000, and the maximum allowed drawdown was capped at 5%. The plan also defined a trapezoid duration of 36 days and a risk coefficient of 2. All of these inputs led to a calculated trade size of 0.16 for each of those potential entry points.
So, you might be asking, how were those specific values figured out? Well, the source documentation gives us this exact statement, so I'll read it to you verbatim. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
Right from the very beginning, the plan laid out two potential paths this cycle could take. Scenario 1. That was the path if only the primary entry was hit. It was targeting an expected annual return of 11.66%. But Scenario 2 was different. It would only get activated if that secondary PC entry was triggered. And that path, well, it had a different set of targets and a higher expected return of 23.32%.
And here's where the timeline gets pretty interesting. You see, the cycle doesn't just progress in a neat 1, 2, 3 order. The documentation shows that after Phase 1, the very next event to happen was actually Phase 3. And this took place on January 22nd.
This slide shows us exactly what happened next. We can see the price drop down to hit that secondary PC level. According to the plan, this is what activated Scenario 2. From that point, the price began to climb up toward that apex labeled End. So just to recap this phase, the price action triggered that secondary entry point. It then climbed up to the end level at 25,601. This officially confirmed that Scenario 2 was in play, and, just as the plan dictated, a portion of the position was closed at this designated safe exit. Okay, that brings us to the most recent event in this documentation. On January 23rd, the cycle officially entered Phase 2. This phase is defined simply as mirror contact.
Looking at the chart from January 23rd, you can see the price action very clearly. It moves up and makes direct contact with the delayed mirror line. This specific event, happening at a price of 25,680, is what marks the official start of Phase 2. So, what's the current status of the trade? Well, the documentation clarifies that the second position, the one entered at PC, was closed out during that end-level event. However, the first position, which was opened at the primary entry M, is still open. All right, let's wrap this up by quickly summarizing where the cycle stands right now. According to the documentation, we've watched a very specific sequence unfold. It went from Phase 1, then jumped to Phase 3, and most recently it has entered Phase 2. The thing is, this cycle is still in progress. And so, the source material leaves us with a big, open question. Will the next observed event be phase 4, which would complete the cycle? For now, the documentation simply continues to observe.
And that brings us to the end of this documentation for now. It's so important to remember the purpose here. This has been a visual record of a market DNA cycle as it happens. It is not a prediction, and it is definitely not financial advice.